Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the week report for August 16th, the week ending August 14th, I should say, 2015. Let me get quick market commentary. We have a whole slew of macro global economic data that was released over the weekend, including tonight, Japan GDP. And despite the lower Japan GDP, the markets in the Nikkei index, Japanese stock market is up 124 points. Contrarian game theory at its best. Let me just cover a couple of very important factors which could have some very positive effect on our markets going into this week. Number one, China. The Chinese top economist at the PBOC, that's the People's Bank of China, that's the Federal Reserve of China, openly stated that they have no intentions of devaluing the yuan on a systematic basis. Remember the crash that we incurred because of the Chinese devaluation this past week was primarily because it was a very sudden event where they went ahead and devaluate the Chinese yuan, their currency, by 5%. Without getting into too much higher level macroeconomic theory and all that stuff, which I cover in detail in my advanced coaching sessions, which I just finished, a 2-hour one, supposed to be an hour, the Sunday night session. And I highly recommend that every single member and free trial subscriber go ahead and sign up for the group coaching sessions. Anyways, what the Chinese finance minister, the top economist, said that they are not in the business of going ahead and devaluing the yuan, and that the yuan is going to be controlled by market factors, which in simple terms means that the market should not be that scared. Global market shouldn't be that scared. And that we shouldn't have little hysterical fits just because the Chinese yuan is going up or down, as his words, based on the currency mechanism that's in place, as in to set the price of the yuan. Keep in mind that our US dollar and the euro and these major world currencies are moving up and down based on what the markets are thinking at that time and what the dynamics of the markets are. As long as the market is in control of what the Chinese yuan is going to do, we are going to be fine. So that's a great piece of news. It's positive. I put that out on the Twitter feed, and that is the way it is. So it's great. Now, second thing that about China, which has to be taken into account, and I covered this in detail in the coaching session right now, is the fact that Chinese, it's a Twitter article that I put out there, and I want everyone to read it. Like I said in the coaching sessions, you don't have to read through the whole article, read the headlines. It says here that there is about to be a massive shakeup at China's state-owned enterprises. Look at what Ronald Reagan did back in the 80s. We went ahead and did a massive privatization program of our telecom industry, our power industry, and it created a huge stock market rally. Privatization is good. When control over major industries and sectors in our economy go from governmental control to private control, it is a positive. No question about it. Because private industry runs enterprises like that, public utilities, telecom, and all that stuff so much better. And the market takes over, competition takes over, and it is a plus for the economy and for consumers. Competition means cheaper prices for consumers, and you don't have a monopoly just because the government is setting a price. Don't keep in mind, I'm not some hardcore Tea Party forecaster here, but government, when they get involved in things, they don't normally go that well. That's just the way it is. Third factor, Europe. Europe, and I put this up in the Twitter feed too, so I want everyone to read it. It says EU Germany, market positive. I put down as the term. Merkel, German Prime Minister, basically said she expects the IMF to take part in the Greek bailout. Simple English. That means that aside from them approving the whatever cash infusion, I believe it's like 70 billion or something like that, that's coming into Greek banks this weekend, and that was worked out last week on Friday, late Friday, it was approved. The International Monetary Fund is also going to be involved in infusing liquidity, i.e., money, into the Greek system to stabilize their economy and their banks. So that's a plus that the Germans are into it, and that's what that matters. Another article that I put out there, which I want everyone to read, it says market technicals that I put out, my term. Never fear, the rally is intact. Technician Rick Ross, very well renowned, Evercore Partners, he basically went ahead and talked about how the markets are okay and this sell-off is a clear buying opportunity. Now keep in mind that I am not a dogmatic bull and I'm certainly not a dogmatic bear. Now what that means is that we will have to take advantage, as I've always said, and I've done that, on rising markets and at the same time keep an eye and be aware of our surroundings and take tactical bets on the short side when necessary. We did that very effectively this past week and even on Friday between the S&P shorts and the S&P longs, we did extremely well. There is another Twitter post out there which says mandatory participation, my words. Are you investing with? If you don't understand the basics of what a difference between a bond and a stock and things like that are, then you are just fooling yourself. Keep in mind that the Clueless 8 service is designed to be an active trading community, whether it be swing or short-term day trading, with a emphasis on financial education. Well, this is the financial education part that I'm talking about. Keep in mind also that we are in a volatile period of the market. We have been. So that means that we are going to deal with volatility just the way it's it's a way of life. So the point is that when we are talking about things like this chart, for example, the spies, what I have in the background, extremely important. This is a confluence and multiple megaphones, okay? Rising wedges, falling wedges, rising wedges, falling wedges in between this, and money to be made. These are the black swan events where the China devaluation, right? Remember what the word is, black swan. Unquantifiable event that happened in our lives and in trading. It doesn't matter what calculations I do, how smart I am, which I'm not. I'm clueless 8. And the fact is, it doesn't matter what the big shots say on TV and the analysts say from Goldman Sachs. These things happen overnight. Correct? So, be prepared for it. I said one thing today in the coaching session. I wanted to really be clear about this. When you see a market open up 20 S&P points, okay? Just trying to write this down on this. 20 S&P points. Does that mean that it's going to be a great day? No. It means that if you didn't have any position overnight, then those 20 S&P points are a waste of time because during the day you're not going to make any money. It happens over and over and over again. Markets will at that point retrace, and then possibly the next day or the day after, it's going to move higher. So just because, honestly speaking, the best trading setups are we open down. We've done this many, many times. We open down, let's say 10 or 20 S&P points, and then we basically buy the lows, depending on the primary trend in the market, which is still up, and then we make money over the next 24 to 48 hours. So that's just the way it works. Okay. So what I'm getting at is this is a tactical trading market, and oops, this is a tactical trading market that we can see, and we are in a position right now to get towards the higher end of the range, and the way you determine it, as I've clearly shown it, okay, is getting to the upper Bollinger, which is around 210.35 on the SPYs, and everything that's showing here, which includes a inverse head and shoulder, no question about it. Here's the head, here's the left shoulder. This is actually more of a market structure low. People who have taken the coaching sessions know exactly what I'm talking about. So you have a head here, you have a left shoulder, you have a right shoulder, and now it's going higher. Does that mean that we're going to basically get up here? Very possibly, yes. Does that mean we're going to make a new high? Very possibly, no. But I could be wrong. A terrific member in the group, in the coaching session, who's a contributing member on the Clueless 8 service. I'm going to say the name, Rip Pants. Keeps on saying, changing his name to Rip something. Mentioned the fact that why can't we do what we did in February? And that is something that, stuck in my head. And it's true because January was a horrible month. I know most of you have no, clue about it, or you just forgot about it, even though you were there. People were crying on their thing, on their, just crying. Okay, and when we look at the S&P and look at the daily, and I'm going to explain this in a second. This was the month of February, right there. Okay, so we had a massive. I'm going to pause this. Okay, there we go. So we have this February bottom, very close to the 200-day moving average. That's the yellow line. And look every time what the market's done. Even now, we slip well below the 200-day moving average, and then we had this huge hammer reversal, dragonfly doji. Put that all in my charts. People have to, spend some time look at my charts. It's all there in the Twitter real-time feed. And we had this, and now we're here. So at this point, we break the downtrend line on the S&P at around, giving it a little bit of room, at around 2101. And we have a bottleneck here on the Darvas box. I hope people can see that. Right there, upper end of the Darvas box, lower end of the Darvas box. This is a bottleneck. I haven't seen a bottleneck in a while. That means the market's going to make a big move one with other. The way you determine it, you look at the stochastics. Stochastics are clearly telling you that, look, we have a big low here at 2063. Stochastics went diving down to almost 4. We had a big move up. We came back, retested those lows almost. Stochastics made a positive divergence right there. You can see that. And then now we made this huge